Every time I get in a conversation with anyone starting out over commercial lending, there's that fear. And it's a new world today. It's not something that you need to be afraid of if you're properly prepared going in.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 321. Today, we're going to discuss the commercial loan process and how you can best present yourself and your transaction to a commercial lender or bank in the most impactful and successful way. Over the past 30 years, my guest today, John Matheson, has been developing, permitting, and or financing completed projects totaling over $50 million, primarily focusing on multifamily, mixed use, and storage real estate. John is the managing member of Healy Development, a company that focuses on eco-friendly and sustainable commercial development to lessen a property's footprint while increasing its value. John, welcome to the show.
Thank you for having me here.
Well, thanks for being here. Tell us a little bit about yourself. Like, how did you get started investing in real estate?
It's funny when you listen to that type of an intro, right? And you have the track record over years. And I just realized how long I've been in this business. You know, when you start to get up to these high numbers, it makes us all sound like we all started that way, right? And it was actually my first transaction was all the way back when Ronald Reagan was still in office. So for how many people can actually remember that, right? But it was the late 1980s and it was for $30,000. And it's where I started out. I came out of college, went down to Wall Street and worked there as a kid. And then decided that it was more suitable for me to be into something tangible like property. So I took the money I had made and I went out on my own into property. And I've never really looked back, but the transaction started small. So like probably most people listening today, right? You have to start somewhere. And today you probably can't start with a $30,000 acquisition, right? Because the numbers are adding to zero just because of inflation over time. But I always grin at my father when he tells me that back in the 60s, they built their first house, our family home, for $12,000. And that was all in. And he ended up having to blast the house. So he had to add $500 to the loan. And he walked down to the banker in town and he said, hey, Fred, I've got to add, $500. My father at the time was in his early 20s. And he said, no problem. I'll put the money in your account and you can come in later and sign the paperwork. Right. So that's where commercial lending used to be, right? Back in the days where they would put the money in your account and you could sign the paper later, till today where it's just such a strict underwriting process. But where I started back in the 80s to today, it sounds like a lot with 50 million under our belt and probably another same amount in the pipeline, but it's just what happens when you get started. So I always encourage everybody, start somewhere. Do your first transaction, do your second, do your third. They tend to get bigger as you go, but the more experience you get, the more likely you are to be able to succeed.
So obviously you've done a lot of commercial transactions and I'd imagine borrowed a lot of money to do those commercial transactions from various commercial lenders. Can you set the table for our audience today about what we're going to be discussing, which is basically the commercial loan process and how to best position yourself to get a successful commercial loan? Tell us a little bit about that. What is your take on that process?
When I first started out, it was very different than it was today. It was very relationship driven. And really the best place to start is not online, searching the internet for a lender. It's really at a community bank in your locality. And that skill is starting to get lost today. The community banks are still bankers that invest in their community. That's what their role is. And you can still walk in and get an appointment and meet them. If you and I try to walk into a large money center bank today, we really never get to meet the people who are at the vice president level making decisions. We're meeting order takers out front who are just taking our information, and then we hope for the best. So back when I first started, it was after doing a couple of transactions, I realized that I couldn't just be into small banking. I had to actually get a legitimate commercial bank relationship. And I had no idea how to do it. And I used to come up with my own little write-ups on our properties, and we'd say, okay, we want to buy this property. And we would do executive summary and attach pictures and walk into the lender. And this went on from the 1990s through the 2000s on every transaction. And we all sit there, all of us who don't have a massive balance sheet when we get started, go through this angst of financing. And then even you and I today, I'll probably make you grin here. If you were to throw a 4th of July party next year, would you invite your banker? Right? And you're laughing, right? It's all the transactions you and I do. They're just not people that we all as real estate developers or real estate investors are comfortable with. That financing institution is such a big part of our transactions. Now, today, we can use software to streamline our presentation. But back when we started, we couldn't. And it seems to me like it's starting to cycle back to where there's all this competition online for lending. But to get started and really build a bank relationship, if you're somebody who's in that space, you need to get a community banker on your side. It's really the best place to get the best rate in terms to get started. Then, as you get bigger and you start to build your balance sheet, you can start to survive the scrutiny of those 3rd and 4th and 5th transactions that you want to do when they start asking you for liquidity, they start asking you for experience, they start asking you for your credit, they start asking you for your balance sheet and your net worth. Those are all things that as you get bigger, they're going to ask. But when you start out, you don't have those things. You need to work on a relationship with a lender. And then how you present yourself to them in the modern era is key. And we can go through that if you like.
I believe presentation is everything, like perception, presentation, marketing of your project. But before we go there, and I love that you recommend starting with a local banker. And for beginners and projects of a certain size, that is the perfect place to start. The commercial lender at your local bank. What typically are those sizes? Dollar amount, the level of expertise and track record you need to bring with you when you meet with that banker? Can complete novices and beginners go talk to their commercial lender, and should they? Or does it need to be someone who's got a little bit more of a track record?
That's the nice thing about the commercial lender. Is that you can walk in and begin the conversation and explain to them what it is you're trying to achieve. Now, if you end up in front of a small community banker and you have a project that is over, let's just pick a round number like $1 million, that can represent a pretty sizable chunk of their portfolio. Their knees can start to get a little weak on those, right? You get into, credit unions those are not they're places that'll lend to you to buy your single family, your duplex, your 3-family. You're in that 1 to 4 family handbook for lending. You get into 5 or more units, you're immediately into the commercial loan handbook. But there's a natural maturation of your business. You don't start out where you and I are. We didn't start out where we are. Right? We have gray hair to prove it in this business. You start out wherever you are, you have to do something small. So if you want to be in multifamily space, buy your first duplex. The banker is very interested in funding you on that. That's a typical community bank duplex, 3-family, 4-family. You're right in their community, and it's very easy for them to underwrite those. And those typically, unless you're in the metro centers, those aren't $1 million transactions. Those are handleable. And then when you get into the problems with the banker where they say, we want you to have 20% down, right? Those type of dollar amounts are more handleable for you speaking to somebody who can help you with that, be it friends, family, somebody to help start you if you don't have that, than trying to go buy a $5 million apartment building where some lenders will say that they want between $1 million and $1.5 million now. That's a real number. And then it's what kind of experience do you have in managing those many units? And those are tough questions to overcome when you're taking that much money from a lender. But in managing 4 rents, you may get away with it. As you get bigger, now you get into property management items, and your property manager can be somebody who actually helps you get loans because they're managing for you. And you can segue pretty fast from in commercial banking. One of the things you can do is when you start out with that small bank, you can accelerate your deal flow quickly. And you probably know this, but this is worth remembering, with the audience. You do 1, then you do 2. Suddenly the banker wants to give you money. Now it gets easier. Now you're into 4. All of a sudden you've done $1 million, $2 million worth of items or the transactions over a 2-year period. You want to do something for $4 million, you can, because you have a little bit of a track record. It's like anything else in life. Banking is such a mirror of human behavior. The banker wants to know you're going to pay them back. They're fearful of their job if they lend you money and you don't return it. And so they're only going to take as much risk as they think they can guarantee that you're going to pay them back on. So start small and then build up.
Anyone who listens to this show knows that Green Property Management manages my entire West Michigan residential portfolio. They manage single families all the way up to large apartment complexes. Marty and his team are running a new special that I think is absolutely nuts. And I tried to tell him so, but he wouldn't listen to me. They want to offer new clients a $250 per unit project allowance to have their in-house licensed crew tackle any project, big or small, for new clients. I can tell you from personal experience that their unique management style will save you money, eliminate headaches, and increase your net operating income. You add on top of that this limited time offer of $250 per unit for new clients, and it really becomes a no-brainer. So text GREEN250 to 21000 or visit them on the web at livegreenlocal.com and tell Marty I think he's gone off the deep end with this absolutely nuts $250 offer. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Talk about how one would go about presenting their deal at that level when you are talking to the commercial lender at the local bank.
What we all used to do is what I said to you. We would sit down, write up an executive summary of whatever we were buying, attach pictures, maybe some market analysis. Then we would put in our transaction numbers, and then we would ask them to get back to us. And we would hand them the portfolio, and then we all did the same thing. And it was a 4-letter word, and it starts with W and it ends with T. We would all wait. And in that kind of a world, when you have a live purchase and sale with a seller, you have competition maybe for the property, waiting for commercial banking to get back to you 5, 7, 10 days is just so detrimental to your business process and your nerves, right? We've all been there. So what you want to do is access all of the modern tools that are there today to help you communicate with lenders different than what we all had. The funny story for me is remember when we got our first mounted cell phones in our vehicles as real estate investors? And then suddenly we could go in front of a property and it was $1 a minute for the call, but you could phone into your broker and say, hey, I'm in front of this property, it's for sale. And that old MLS book was actually a book, right? I mean, I'm showing my age, but today everything is all digital. So the modern software that's out there that allows you to communicate with lenders is key. And that's all part of the things that we create as developers to help us. I use our software Leverage to help me prepare for the lender. There's other ones out there that people can use. Whatever it is that you use, you want to make it so that the lender is getting modern data flow from you by minimizing the amount of work that you have to do so you can get an answer up front. We know this about lenders today because people have written it that we can read. Behind Oz's curtain, we actually now know what's there. All they look at on a cash flowing property to start underwriting is the net operating income. So we need to know our income and expenses on the property. Then they need a capitalized value, which means if they're over 5 units, they're going to determine a discount rate and divide it by the NOI. That's cap rate valuations. If we're under 5 units, they're going to do a market value appraisal. So they have to get the NOI, then they have to value it. And after they've done that, they'll do a debt service coverage ratio analysis. And most lenders want to cover at 1.25 times the debt service. So that's just fancy words for the principal and interest payments for a year are a number. Let's say they're $10,000. The lender wants us to be bringing in $12,500 or more a year to cover those payments for them after our expenses. It's really that simple at a commercial bank level. That is coast to coast. That this is not business lending. That is no matter where you and I go and what we're buying. In the beginning of the conversation, those are really the 3 things they care about.
Those 3 things would be net operating income and its resulting value based on cap rate or an appraisal. And this is in the commercial world, so it's 5 units or more. The debt service coverage ratio, can the cash flow that's coming from the property actually pay back the loan and pay back more than the loan at a 1.25% basis or higher?
And I can almost get into the same discussion with a 2-family. The debt service coverage ratio is a little different because we don't have some of the fancy terms carve-outs in commercial lending to worry about as investors, but it's almost the same analysis. So when you know that's what they're doing, why would we tell them in the beginning conversation, anything other than that? Instead of why would I write an executive summary? Why wouldn't I just present them computerized information that says, here's what my transaction is. Here's the net operating income at this cap rate that I've picked. Here's the valuation, or here's what I've pulled for comparables for appraisal, or here's what my broker opinion is, or something. Here's the listing that has the value, anything to show them some value because they're going to do their own valuation anyway. And then why wouldn't I just have a debt service coverage ratio computation for them? Again, the software does that for us. Why wouldn't I just hand them that stuff and then say, okay, would you like to do business with me on this property? I could walk into any bank anywhere who doesn't even know me. And if I just present it that way and I just say, would you like to fund this property? I don't need to speak. I need the banker to answer it. And the stories that come back to me from the people who use software and the like to present to the lenders is laugh out loud funny how the lender reacts, because the lender will look at a 1-piece page of software explaining those 3 things to them. And they'll say, where did you get this? I've never seen anything like this. And it's funny because it changes the conversation. What I want to relate to the audience today is we don't need to be so fearful of commercial banking. We just need to manage the dialogue and the conversation as the investor when we walk in. And we have to be prepared because there are so many of them out there that if we don't get the right answer at one bank and we know that we have a fundable transaction, we need to just go to the next bank. If there's one thing all of us real estate investors are, right, it's resilient.
In my experience, there's more to it, though, than just showing them those 3 numbers and saying, here you go, Mr. Banker, give me a loan. The lender typically, they want to know the story. What's the story with this property? How are you going to improve it? What's the team and the track record? And then they want to know your financial strength too.
So what I'm doing in the front end is just starting the conversation. See, normally we would do all of that in the old days, and it still works today, but it works for those of us who have all those things. right? So the people who don't have the experience at the level that we might, the easiest way to get the banker to buy in, we found, is to be able to go to them with those three things up front. And then if the banker says, sure, I'd be interested in funding your transaction, now you have to be ready with all of the rest of the things that you know they're going to ask. And you just hit on absolutely what it is. What's your experience? What is it that you have for a financial statement? They might want your tax returns. They'll pull your credit. As the sponsor, you're now getting vetted. But what the bankers tell me in the space is that they tend to get vested because bankers are like any other business. They need to write loans to stay in business. The bankers will get vested in the project faster if those three components are met up front first. Then if you have issues on any of the other items, they may be more likely to help you because they've looked at the transaction and they've said, well, the transaction works. Now we have to vet John and make sure he works. And maybe if there's some issues with John, they'll help me.
I want to just plug one of our previous episodes, which we did recently. It's episode 314 with Paul Winterroad, where we talk about the personal financial statement, the schedule of real estate owned, and how vital those are to the process of actually getting a loan. And I'd love it if you could just say one or two things about those as well.
As we get bigger, all of those things become more vital. So if I wanted to go today and buy a $2 million apartment building, I have to put a schedule together of everything that I own, where the loans are, what is out on the principal of the loan, what the recent value of the property is, what the payments are, what the coverage ratios are for each, and how each property is performing. The banker is going to look at this as an addition to my portfolio. So they're going to make sure, and do we have property management in place? And what's our business plan for running, improving, maintaining, refinancing, and ultimately exiting the property? All of those things would have to get written up for an acquisition that size. But if we're doing $400,000 multifamily, 2-family, 3-family, and it's our third one that we're doing, we might not have as much pressure on that schedule from the lender. It'll be there. We're going to tell them what we own, but we might not be under the same level of scrutiny that we would be as we start to get bigger. So back to what I was saying earlier, it's hard to make a big splash right out of the gate. And you swinging for the fences on the home run is tough. You can get there, but you really have to start smaller because all of those types of underwriting regarding you as the sponsor become very critical as you get bigger.
What emphasis and importance do you put on the story that you tell the lender to get them excited about it? Or do you feel that just the numbers alone are enough to get them excited about it?
If you're in the relationship business of building with the community banker, the story's fantastic. I mean, why are you in the business? Why are you here? You want to buy a multifamily. Where do you work now? Are you segueing into the world where this will be your business? Or are you going to keep your current job? Story and your story and what is motivating you to come to the lender for their money, because they don't want to be your partner. They're your lender. So they're going to lend you money. They need to know you're going to pay them back. But what's your story? Why are you here? If you're already at the point where you're in business, so you're going to present yourself as a person in business. You have an LLC. I say this all the time to people who are starting out in the little mentor groups that we do. If you want to be in business, where's your LLC? Where's your voicemail that's professional? Where's your email that is actually your business email? And on and on and on, right? Because we need to present ourselves to the lender as in business if we are in business. If we work for an insurance company and we just want to be an investor, we just tell the community banker that. Are we going to live in the property? No. Okay. So who's going to property management for us if we're at work all day? So we have those questions that we can answer up front first as the investor, and that's part of our story. But if we're buying a $2 million apartment building, you and I, and we see an opportunity to put solar panels on the roof and turn the building into green and make it sustainable and all that fun stuff that we do today, that becomes a rebranding of that building. And a lot of community bankers want to invest in rebranding and rehabilitation of buildings in their community. So that would be a crucial part of that conversation. And we'll probably get a higher loan to value if we're doing things like that versus if we're just coming in saying, hey, we're going to add it to our portfolio and we're just going to try to manage it a normal way. So that can be fun when you're telling those stories.
What are some of the red flags that lenders are looking at for that will determine that they might not want to make this loan to you?
If you're in the small world, the banker is going to rely on you personally for a lot. So they are going to pull your personal credit, and credit scores will get thrown around like numbers, right? And you'll hear things like, if you have a credit score over this number, you're good. But really, the banker's going to study the history of that credit. If you're in a lot of times, your rent payments are not going to be on there that you made. So if you're not paying your Visa bill, it's going to be hard to get a commercial bank loan, let alone a mortgage. So personal credit is a big thing that you have to make sure you have explanations for, just like if you're going for a home mortgage, when you're sitting in front of a community banker at the start. And the other thing that is just unavoidable, it becomes just that, it's just part of the real estate investor game, is where's the down payment? Bankers want you to have what they call skin in the game. We all know this. We talk about this all the time. So how do you solve that? If you don't have it, how do you solve it? How do you bring in that equity partner to help you? And that's probably a whole nother episode on its own, right? But that's where we all start out. It's like, who do you bring in to help you when that banker says 20, 25% down and they want to verify it? Right? That those are things that are inevitable in the process that tend to be the third thing is the property manager. If you're working all day, who's managing the property? If you're going to do a 15-unit transaction, now you're getting into a little bit of a smaller size building, but who's collecting the rents? Who's doing that if you've never done it before? Now, if you hire a property manager, that usually is enough for the lender. They write a nice little intro letter for you. Maybe you sign an agreement with them. They're taking 5% from you. You show it to the banker. Banker knows who they are. You're probably good. Short of that, there's a flag. I guess I could go on, but those are the big ones.
I agree about the property management piece. A lot of times they want to make sure that their investment, because it is the bank's investment too, is going to be taken care of properly. So they want to see a professional property manager in place, or at the very least that you have that track record of managing. When you level up and you're no longer talking about the 5 to 15 unit, you're looking at the 40 to 100 to 200 unit apartment complex or larger commercial property. Are you still talking to the local banker, or are you talking to someone else at that point?
You're talking to someone else at that point. Absolutely. You're either into capital company space, you can get into agency money space, you're going to get into larger investors that you pull together who have a desire and an appetite to be part of what you're doing. They're borderline family offices or institutions unto themselves, and they like to invest that way. They're high net worth individuals that are there that will likely participate in different size buildings. It starts to get, and then your debt side, it's always institutional at that point. It's either the capital companies, it's the agency money. If you're in a perfect world, it's life insurance company money, but that's rare. That's hard to get, as you know. If we can get that, we're pretty happy. And yet the commercial bank, the next level from the community bank, that regional commercial bank is still a huge player in financing multifamily units and different development size projects. That they still do the lion's share of the business.
I know that you have a service that you want to talk about that helps people acquire these loans and helps improve their chances of success. Can you talk about that a little bit, please?
The backstory on that, we all, when you get to be yours and my age, we've survived recessions, right? I've been through 3 of them now. And I'm trying not to go through the 4th as the rest of us are, right? So we're hopeful it's not coming soon. But when you do that, you oftentimes you get to the other side of the recession and you're sitting around, right? So that 08-09 recession that occurred, we were developing properties and we were doing it on 2 to 5 year commercial bank terms. And I get a phone call from one of our banks that we've done business with for like 15 years. And they said that they wanted me to get this particular property, which was maturing in 6 months. They wanted me to get it off the books because they were being acquired. And so for me, usually you just extend your commercial loan when you're developing a property, but you're not done. And they said, and we know you can do it, so we'd like you to do it. And I said, well, you didn't give me a lot of time. What would happen if I don't do it? And they said, well, we'd have to foreclose. And I said, I've never heard that word used toward me ever. You've got to be kidding me. They're like, no, we need you to get this off the books in 5 months. And it was a little over $1 million on an asset that was valued at almost 3. So it wasn't like there was a loan to value problem. So I'm sitting there going, all right, well, who am I going to call? So I start making phone calls, right? And nobody's all that excited in Bankland to take on another piece of property back in the other side of that recession world. So I started to look online, and I'm going to Google for a resolution. And I'm sitting there, and I hadn't been in this space. And I realized they want your social security number and your personal financials uploaded in the internet. And you and I are looking at each other the same way. I'm like, I'm never doing that. There's just no way, right? I'm ever going to give that stuff online. So there's got to be a better way. So I start to network. And I end up with a commercial broker who says, you have to go see this guy, right? Who's got his own consultancy, and he'll help you. So I called him, and his voicemail's full. I said, all right, great. Just what I need. So he calls back and he says, hey, I saw this number called me. And I said, so here's what I have. And he says, yeah, all right. Bring your net operating income on the project, meet me. And we decide to meet at a diner on a Friday morning. And at our age, the two of us shouldn't have been in this diner. It was, eggs, sausage. It was just fantastic. And he's got this computer, and he's got a laptop, and he says to me, all right, give me your numbers. So I'm giving him the numbers, and he's tapping them in. This whole process is taking just a few minutes. And he turns around the computer, and he's got a big word. It just says go in green on it. And I said, what do you mean go? And he goes, I just took your numbers and I put it through my software, which vets your transaction for the likelihood of a commercial loan. It tells me if you're a stop or a go, you're a go. Now, I looked at him and I said, I still don't understand. And I've got all this anxiety because I have to place a large commercial loan, and I think this is just crazy. And he says, yeah, I've used this software to vet billions of dollars of loans for banks and individuals. It's extremely accurate, and I will be able to get you a letter of intent in a day or two. And now I'm starting to look at him, and you'll laugh because I'm changing from person in huge need to entrepreneur, right? And I'm like, what do you have in there? Because you just relieve so much pressure for me. What is that? And I said, I need to get that. And he goes, well, you can't have it. It's my software. And I said, well, do you realize how many people this could help though? Because you're telling me I can get an answer before I ever speak to a commercial banker about if I'm likely a stop or a go for my multifamily transaction. That's got a lot of value, and it's going to have a lot of value to not just me. And he says, yeah, I've thought about it, but I don't know anything about computers or technology, and I have no idea how to do it. And I said, well, I do. And we partnered. And it took us a long time to get it in the market. It was like a 4 to 5 year run to actually build it. And now it's in the market as Leverage, we call it. It's LeverageCalccom. But all it is I mentioned in the beginning for you, for people who are newer or even for those of us experienced, it's just one of the modern tools you can use. It's free, so you can go in there and use it. And it's designed to be able to just let you know before you speak to a lender on NOI, DSCR, and the things that you can open a conversation with different than how you've opened them before. And most people who write us the nice little testimonials back say it gave them a nice level of empowerment going to the bank. And anything that we can do as professionals in the business to help people in the next generation coming along feel more comfortable bridging the gap in conversation with the lender is just great for us.
If I hear you correctly, anyone can go to this website and for free type in their aspects of their deal. And the key components, once again, would be the net operating income cap rate, valuation and then the debt service coverage ratio. And then it's like green light, red light kind of situation, or?
Yeah. And then and then if you want to connect with lenders, you can imagine the lenders came to us and said, gee, we want to meet the people who have go transactions. So there's some of them in there that you can click through to and meet them, or you can download, print, and share with your own lender a leverage report, which basically tells your lender your numbers are pre-qualified under basic commercial banking guidelines. So the lender takes it and says, okay, where did you get this? Because this is great. You've already run the numbers. You've made me feel like we have a transaction we can do. And that's where the conversation is different from how we all used to have to do it with that executive summary and the numbers inside and then wait. We don't have to wait anymore. We can actually get a banker to say, yeah, I'll continue the conversation with you almost instantly, which we like.
Where does it go from there? If you choose, you can shoot it out and get some quotes back from different lending institutions.
Yeah. So then the lenders inside will contact you, and we're out of that. We're just a software. So the leverage is finance software for use by the borrower to be able to get a level of understanding and empowerment before you ever speak to a lender. From there, how you handle your lending relationship is entirely up to you. You can go to yours with it, or you can connect inside, but the software is not involved in that at all. It's just really it's just an introduction at that point.
What is your cut of that then? Do you get some sort of broker fee if a lender does place a loan on it? How do you make money off of this business?
So the lenders pay a technology use fee on the platform. It's similar to like LinkedIn. In other words, you get a LinkedIn request in, and the lender decides to accept or pass on the request. So if one of the leverage customers sends to the lender a leverage report, the lenders decide if they want to work with them or not. They'll accept or pass. And they pay a technology use fee for using the platform. We don't get paid off the loan. So it's just whoever uses it pays that. And then we do have, beyond the free application, like most softwares, we have a more comprehensive software that you may decide to subscribe to, but you can get out of the free app anything you want. But if you decide you want to be in position for a refinance, or you decide you want multiple levels of cash flow reports on a property, different underwriting mechanics beyond the basic intro, you can decide to subscribe.
How many lenders are actually subscribed to this, and what types of lenders are they?
Around 110 in there right now. And there's several alternative lenders, as well as some prime plus commercial lenders. So it kind of fits the spectrum. It gets tailored when you go through. The lenders that are more appropriate for you will get selected, and you can choose who you want it sent to. It's not one of those platforms where you put in all your information and you wait for a response from the lenders. You're very proactive in it. You decide who you want to get your information.
Are you going to get a lot of solicitations? Because I know one of the things that I get concerned about when I'm thinking of refinancing my house, if I put it into one of those online portals, I just get inundated with emails and phone calls, and it never lets up. And not until I'm dead someday. What is it like in your ecosystem?
So we did consolidate it where we put one gatekeeper at the front of the lenders to be able to process the information. But when your leverage report goes in, the software redacts your name and your address. All it does is give the lender the zip code location of the property so they can determine if it's in a footprint where they lend. And if the lender decides to accept and wants to continue the conversation for funding with you, that's when your information gets given to them. If they pass, they never see it. So I wanted that level of privacy for anybody using it because of having the exact same experience that you just shared. I can't stand that.
Any other thoughts or advice for our listeners who are getting ready to go out there in the attempts to get a commercial loan? What can you advise them to keep in mind in order to be successful?
Every time I get in a conversation with anyone starting out, over commercial lending, there's that fear. And it's a new world today. It's not something that you need to be afraid of if you're properly prepared going in. Most of the stories that come out of, lending, it's still a very difficult process. There is no real easy way to put it. It's not easy to get a loan to buy a multifamily or a large building or anything ever. But the more prepared you are going in, the more likely you're going to have some level of success. So you need to go through the process of preparing yourself first, but don't be afraid of it. Commercial banking at the community bank level is still the best place for rates and terms. It's worth the effort. It really is worth the effort to walk in and try to meet somebody there who is responsible for lending and begin dialogue and begin a relationship. And once you get that in place and you do a few, then you can get into the bigger stuff and the bigger problems that you and I have all day, which still makes for a heck of a portfolio once you learn to navigate it. But you have to start somewhere and start at that community level.
If anyone wants to get a hold of you or find out more about Leverage, please tell us how. And once again, give us instructions on how to find Leverage online.
Leverage is LeverageCalc.com, the word leverage, CALC.com. And they can go there. And again, it's free. So they can get a lot of value out of that, just doing that prior to, and even if they decide, well, they're not somebody buying something today, but they might want to see how things work. A lot of tutorials about financing in there for them. And my email is john@leveragecalc.com. So it's easy. I'm easy to find.
Thanks a lot for talking with us today about acquiring a commercial loan and your advice to start with the local lenders, get to know the commercial lenders at your local bank is excellent advice. Understanding net operating income, cap rate, valuation, debt service coverage ratio, key items. And then just all the other information you shared, including the additional information about Leverage. I really enjoyed this conversation, and thank you very much.
Well, thanks for having me on today.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIGinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.